Cameron Brand, Director of Research at EPFR, joins in. Cameron, good morning to you from where we're sitting. Great to speak with you. And I suppose you could help us solve the question that everyone's asking. Are we seeing FIIs reverse their trend on India after over 6 months, or is this just a one-off, more passive flows than anything else? What's your sense?
My sense is certainly that the mutual funds we track have been thinking that India is starting to get back into attractive valuation territory. What we have been seeing in recent weeks is that investors, certainly the ones that we track through the mutual fund and ETF flows, finally appear to have learned some caution. So while the news from India is positive, what we haven't seen in recent weeks is a particularly strong reaction either way. As you know, China announced a new round of stimulus initiatives, and while flows to dedicated China funds turned positive, they certainly didn't sort of turn spectacularly positive. Indonesia had considerable market turmoil in the other direction this past week. And while flows into dedicated Indonesia funds slowed, they were still faintly positive. So, the general tone, certainly of the flows we track, is sort of prove it. India was getting a bit more positive attention, and average allocations among the diversified GEM funds we track for India is actually at a record high, or was coming into March. But I think the market will sort of need to prove itself for certainly the mutual fund floodgates to really open.
Cameron, morning. Again,
morning.
From where we are. But the point that you make is well taken. But I'm just wondering, in a week that is going to be important on the data front from the US perspective, what else needs to happen, and what would happen, in your opinion, on the 2nd of April that would be negative and that would be par for the course?
I'm hard pressed to give you an answer there. To be honest, there's less attention on the data over here. It's been so topsy-turvy. And in the universe that I pay attention to, the real focus is what's going on in Europe. That's the hot story at the moment. Investors are certainly willing to take on alternative cues, but it would take quite a bit to completely convince people that the US story has rolled over. And in fact, towards the end of this recent week, there was another leg up in terms of flows into US equity funds. US bond funds continue to attract money. So investors, certainly towards the US, will take some convincing, I think, to really shift out of US assets.
Cameron, morning. This is Hiral on the side. So, okay, two aspects over here where we are talking about that Trump is actually dubbing the April 2nd tariff deadline as a liberation day. And it's obviously hard to ignore the downside risks, because you're talking about a worst case scenario of 25% blanket tariffs if they materialize. Now, with all of this said and done, and the way FIs have acted on India in terms of the numbers that we saw last week, do you think India is then becoming an attractive bet versus the US?
I certainly think the pieces are in place. I mean, valuations have corrected after a very lengthy run-up in the market, which was certainly chased by the money we track. India is historically regarded as a good play when global trade runs rough, because of the larger than than usual component that domestic demand plays in your economic story. It's hard to be certain about anything in this current environment, but certainly if the tariffs really come down on April 2nd and we get what might be arguably called the worst case scenario, then I think India is in as good a position as any market.
I think that's the big takeaway. Thank you so much, Cameron, for speaking with us. Always a pleasure.